What is going on, everybody, and welcome to bootcamp day number 5. Today we are going to be going over support and resistance, what support and resistance even is, and how you can identify it to use for high probability trades. But real quick, before we hop into it, what I need you guys to do is do your daily check-in, comment down below letting me know that you guys are still rocking with me and that you guys are dedicated to make it through this entire bootcamp. And while you're at it, make sure to click that subscribe button as well as clicking that like button, and also make sure you have that bell notification on so you do get notified every single time a new bootcamp video is uploaded. Let's hop right into support and resistance. Alrighty, so let's start off with what support and resistance even is. So starting with support is going to be an area that price comes down to that buyers think is a good level to buy into the market because they believe price is going to go up, which as a result they can profit off of it. So let's just imagine that price is trading above this support zone right here, and let's just use a little line chart right there. Price is trading in this range, it's coming up, back down, and then we have this strong support area down here, and let's just say 45.6875. Through using support, we can assume that if price were to come back down and test this area down here, buyers are then going to enter the market, buying up the underlying asset, and as a result, if those buyers are strong enough, should send prices higher. So because they see a support zone, that is where they want to buy because their stop loss would be right below support. They see this as a discount in the stock price. And again, they are assuming that price is going to bounce at this area right here and continue going up, which as a result is going to lead to profits. So again, support is going to be an area that price comes down to. Buyers are going to enter the market, which as a result should push prices higher. Now on the flip side, we have what is known as resistance. Resistance is an area where selling pressure hits the market. So it could be the buyers down here are thinking that price is overextended to the upside, and as a result, they want to lock in profits. Because if they were buyers all the way down here and price is now all the way up here, more than likely they are going to lock in some profits because they don't want to lose those profits. So they think price is getting overextended, which as a result, they are going to start selling to lock in those profits. Now, on the flip side, we actually have what is known as short sellers. Short sellers are people that think price is overextended, and as a result, they end up selling shares that they do not own, and that's a topic for a whole nother video. But they go short in the underlying market, meaning they have negative 100, negative 200, negative 300 shares, etc. And they are selling this to somebody else, and they are hoping for price to drop to the downside so the short sellers could profit off of this move right here. So again, if you're a buyer, you're buying down here, and if price goes up, you're going to make money. Short sellers, they can sell the equity, sell the futures, whatever it is, up here, and if price drops, they are going to profit off of that move. Now, as price comes down towards support again, the people that shorted up here, what are they going to do? They're more than likely going to want to lock in some profits. So as a result, if you're short, you have to buy to then cover your position. So the short sellers are then becoming buyers. Buyers in general who are waiting for the support touch are buying as well, which as a result should send prices higher. So that is essentially what support and resistance is. Again, resistance is where selling pressure enters the market. Support is where buying pressure enters the market. But there's also something that you do want to pay attention to when price does approach these areas of resistance or support, because it can set up for a high probability trade. Now, going back on over here, let's just say that price actually broke through resistance at this point right here. What can we assume is more than likely going to happen? Price is going to continue to drop to the downside. Why? Because buyers tried to buy at support, and there's also short sellers who are covering their position at support. What do you think happens if price breaks below support? The buyers who entered right here are going to scramble to exit their positions for as close to break even or slight loss as possible. But also at the same time, you have the short sellers that sold at support and then they saw price drop lower. FOMO is going to start hitting. So what are they going to do? As price starts to come back up, those buyers who try to buy right here are going to cover their position, as a result becoming sellers. And then you might have those short sellers re-enter the market to try to catch the next leg down. So as a result, when price breaks support, it is more than likely going to become resistance, as you can see right here. which again can set up for a high probability trade because you have the buyers scrambling to exit their positions, as well as the short sellers trying to get back into the position. So remember, when support is broken, more than likely it will become resistance. Now on the flip side, let's just say you are a buyer down here, price is pushing to the upside, it comes up to resistance, and as a result, you're like, okay, I'm going to lock in my profits. Now also at the same time, you have short sellers that are trying to enter short to try to catch this move back down. Now what happens if price breaks through resistance? Well, the people who sold short are going to try to cover their position as close to break even or slight loss as possible, becoming a buyer. I just sounded like I was from New York or Boston. Jeez. Anyways, as a result, becoming a buyer. And then those people who bought down here and sold at resistance, they're like, crap, price broke through the resistance. It's more than likely going to continue higher. So what are they going to try to do? They're going to try to get in as close to the price that they sold at as possible. And as a result, resistance should then become support, and price should give the next leg up. So that is the basic breakdown of support and resistance, what it is and how we can use it to identify high probability setups. So again, when price is coming up towards resistance, you want to look for a rejection. If price is coming down towards support, you want to look for a bounce. If price breaks resistance, you can look for a high probability trade in that way. And if you are looking to learn more about my overall day trading and swing trading strategy, how I find bounces, rejects, support and resistance, price targets, Fibonacci, all the indicators I use, and so much more, make sure to check out my 450-page book on Amazon titled The New Age of Technical Analysis. Tons of amazing reviews. Definitely make sure you guys check out the reviews. But if you are interested in learning more about my strategy, make sure to check out my book, The New Age of Technical Analysis, on Amazon. The link will be down in the description. If price breaks resistance, you can look for more upside. If price breaks below support, you can look for more downside from there. Now, if you haven't seen bootcamp day number 2, 3, or 4, I highly suggest that you guys go watch those videos, because we're not simply going to be entering short just because price comes up to resistance. We're not simply going to be entering long just because price comes down towards support. We want to piece together the price action plus the actual candlesticks plus an area of interest to then validate the setup. So again, make sure you guys definitely go and watch the previous days if you have not already. Those links will be down in the description. Anyway, so now when it comes to identifying your areas of support and resistance, the very first thing that I like to do is start on the higher time frames. So typically like a weekly time frame. Now, when plotting areas of support and resistance, what I want to mainly do is pay attention to the wicks. The wicks are going to tell us a very important story. The reason being, that is how low or how high price traded throughout that time frame. So on the weekly time frame, that's typically where I start. Sometimes a monthly, it just depends on, what stock I'm trading, if it even has a monthly level. So sometimes a monthly, sometimes a weekly, but mainly the weekly is where I'll start off. Now, what we want to look for is an area where we have at least 2 to 3 hits on the wicks. If I hit a body directly, then I will count that. Like as you can see, if I were to just draw a line right here, you can see it hits a body directly. I will count that, but if it just like cuts through the wicks or cuts through the body, I don't really count that. So again, I want to hit as many wicks as possible. And if it hits the body directly, then I will count that. So again, I'll start with the weekly levels. Other areas that we want to know about for support and resistance is going to be previous higher lows, previous lower highs. So as we see over here, price was downtrending on the weekly. So this was a previous lower high. This was a previous lower high right here. And then this was all-time high. So as price came up to this previous lower high, look at what happened with ES. We rejected right off of it. And now we have this bearish engulfing candlestick. Over here, this would be an area that you want to know about. Price broke above it, therefore resistance is now invalidated, and it should become support if price comes down and test it. Now, if we're looking at this uptrend over here, as price starts pulling back and setting these higher lows, we want to know about this area right there. That could become support. This previous higher low right there could become support. This previous higher low right here could become support. This previous higher low right here could become support. So again, previous higher lows or previous lower highs can also become support or resistance zones. So if we're looking at the weekly time frame for ES, right here, right off the bat, I can identify an area of resistance. As we can see, we have this area where we hit one wick, and actually if we go on over here, we hit 2 more. So one right there, another one right there, another one right there. We cut through on the wick right here, but then we pretty much hit it directly here and here, and then we hit a few bodies over here as well. as price finally gave a bullish close above it, notice how it came back, made a support, and then pushed back on to the upside. If we look right here on the weekly time frame, this was a very strong weekly resistance as well. 1 hit, 2 hit, 3 hit right there. As we can see, price had a little bit of rejection at that area, came back up, hit that previous lower high, and then price pulled back down to the downside. So pretty much what I'm doing, like I said, start on the weekly time frame. Then from there, I want to break it down to a daily time frame. So actually, if we're looking at ES right now, what did price just come down to, or it's actually getting very close, was this previous, actually it closed right on top of it. So this previous resistance point right here, as we can see on the daily time frame, 1 hit, 2 hit, 3 hit, 4, price broke above it, never came back to test it as support. And as we can see on Friday, price came down and finally tested it as potential support. So we're going to see on Monday if this is truly support and if price pushes to the upside. So that would be an area that I would want to know about, especially over here until price broke above it. So over here, it's resistance. Now it's support. Now we will see what ends up happening from there. This previous resistance point right here, as we can see, we had a lot of price action right there, tons of resistance, and price finally was able to break above it and get the next leg up. Same thing here when we sat in this consolidation. Where was resistance? Right around this 4303 level, 4300. So again, those intervals of 100 are also going to be important. 4600, 4700, 4800, etc. So I'll plot my levels on the daily, then I'll break it down to a smaller time frame like the 4 hour. Same thing, I'm looking for wicks. So as we can see right here on the 4 hour, if you weren't able to see it on the daily, you can definitely see it on the 4 hour right here. So I would plot that as an area of resistance. Over here is an area of support as well. So I would plot that. Over here was an area of resistance as well, plus support right here. So again, would plot those levels. And then after I'm done on the 4 hour, I will then go finalize it on the 1 hour time frame. I will say a majority of the intraday levels that I like to trade are based off the 1 hour because those are newer levels. So as we can see on the 1 hour time frame, we actually have a really solid level right here. Previous resistance, support right there. We made it support a bunch of times until price finally broke below it. And then what can we see? Price came back up, made it resistance at that 45.59, and then ended up dropping yesterday. So as we can see, support right here, price broke below, came up, hit it, made it resistance, right down to the next support zone. So that is how I plot my support and resistance levels. Now, again, when it comes to using these areas, if price broke above resistance, we would be looking for more upside. Price broke below support, we would be looking for more downside. When price comes up to resistance, we want to watch price action. Why? Because price action is going to tell us if price is going to reject or bounce at our area of interest. So if price starts coming up to resistance, we're going to be looking for bearish candlesticks, gravestone dojis, bearish hammers, bearish engulfing, long upper wicks, etc. If price is coming down to support, we're looking for bullish hammers, bullish engulfing, dragonfly dojis, long lower wicks, etc. And then also piecing together the volume with those candlesticks at the level of interest, support and resistance. That is what's going to help us understand, okay, is price truly rejecting this area or is it truly trying to bounce? If you're looking at the price action and the volume at the level of interest and you're not seeing confirmation, what do? You do not take the trade. So that is how I plot my areas of support and resistance. Now, the other thing that I did want to bring up this video, and I do have a video later in this boot camp that we're going to be discussing this more in depth, is we can actually find really high probability trades if price breaks a resistance and fails to hold above, or if price breaks below support and fails to hold below. So yesterday I actually ended up missing out on this trade. This is a different setup that we are going to discuss later in this boot camp. But if we are looking right here, this was the pre-market low, which is also another area of support that we want to know about. But price broke below the support, but reclaimed it. As a result, that actually sets up for a high probability trade in the opposite direction. So price came up to a really strong resistance, broke through it, slightly held above it, but then immediately started reclaiming the opposite side with bearish price action. That is actually going to lead to a high probability trade to the downside. Reason being, if price were to break below support, what do you think's happening? Stop losses are getting hit. People are entering short because they think price is going to drop lower. But then as it reclaims it, those people that got short, what are they going to do? They're going to cover their position, becoming buyers. And as a result, that's exactly what happened over here. I literally talked through this trade yesterday in my live stream. I just didn't end up taking it. And I had a little bit of FOMO because this thing moved 18 points from where I was looking to enter. but I talked about this trade before it even happened at this area of support and the possibility of it coming down, false break, reclaim, and then a push back up into this high right here. And as you can see, that's exactly what it did. Same thing with resistance. If price breaks above resistance and starts reclaiming the opposite side, there's more than likely stop losses that are getting hit up there. And then people who are looking to go long because, oh, price broke above resistance. And if price starts falling below that resistance, again, it should become support. What's more than likely going to happen, they are going to cut their position, becoming sellers. And as a result, we should see price continue to drop to the downside. So you can look for high probability trades at those false breaks of support and resistance, but also we can watch support and resistance for rejects or bounces. Now, if price breaks above resistance and makes it support, you can look for a long entry with your stop loss right below. If price breaks below support, comes back up, makes it resistance like it did in this example right here, what can you do? You can look for a short entry with a stop loss above resistance. But that is going to wrap up day number 5 on support and resistance. Throughout these next few days, I'm going to be showing you guys other ways that you can identify levels of interest. Again, if you guys haven't already, definitely make sure you guys go back and watch the previous bootcamp videos. Also, make sure to do that daily check-in. And if you guys did find value in this video, make sure to smash that like button. Make sure you're subscribed to the channel, and also make sure you guys have that bell notification on so you do get notified every single time these bootcamp videos are uploaded. Other than that, everybody have an amazing rest of your day, and I'll see you guys in tomorrow's bootcamp video.